So raise your hand if you've ever shopped for a car. Just recently, I was at a car dealership, and the first question they asked me, what do you want your monthly payments to be? I thought, how odd. They didn't say what kind of a safety rating do you want for this car, what color do you want for this car, what style or model. And it made me think that, when I go shopping at the grocery store or in other places, we don't barter in this U.S. economy for those kind of things, like, I'll give you a quarter for that apple. Not really, but there are things that we do have control over, buying a car, buying a house, and your student loans. And so today we're going to be talking about how to help you take control of your student loans. Now, I did not realize that we could take control of our student loans until one of my clients asked me a question. This was Dr. Carl Sherman. He's a brilliant mountain climbing kind of guy, and he said to me, Joy, I am really worried about my student loans. They're huge. The size of my student loans are bigger than a mortgage. I don't know what to do about it, but I've heard about this program. It's called Public Service Loan Forgiveness. Could you tell me something about it? Silence. I didn't know anything about it. I had been a financial advisor in practice for many years, working with physician and attorney and pharmacist clients, but I'd been busy, and so I hadn't looked into this program, even though I'd heard about it. And so I said to him honestly, Carl, I'm sorry. I don't know anything about the program, but let me look into it. And so I did. And what I found out about the program changed his life, changed my life, and changed the life of hundreds of physicians across the country and hospital systems. So that's what we're going to talk about today. Let's look at our roadmap for what we're going to talk about. We have three things. Is public service loan forgiveness right for me? Is an income-based repayment plan, will it help me save money? And thirdly, we have some tips to help you avoid some problems that we see. We call this what you don't know can hurt you. But before we get going, I want to just acknowledge three things. So when we talk about student loans, I found out that this can be very emotionally jarring. The numbers for physicians now are very high. Talking about these dollars, sometimes people haven't spoken with their family members or their employers or sometimes not even their colleagues about student loans because they're just feeling the weight of this. But I just want you to take a deep breath. All is well. We're in this together, and you can manage it. The second thing I want to acknowledge is that not everybody who is here today or is concerned about student loans has a student loan. Often I talk to people who are administrators at hospitals or recruiters or other people that maybe love or care for someone that has a student loan. So raise your hand if you're here today because you have a student loan. Yeah, so about half of the crowd today. So thanks for being here. Okay, thanks for being here. So all is well. We're going to take care of things for you. And then the third thing I want to acknowledge is just a story about one of my clients named Dr. Walsh. Now, Dr. Walsh is the Chief Medical Education Officer of a large Level 1 trauma center in the Midwest. She is also a practicing cardiologist. And she was worried about her residents because she felt that they didn't have enough information about student loan options. And she'd been looking all over trying to find someone that could speak to them about student loan options. And she couldn't find anybody. And she said to me, Joy, I'm worried about the resiliency and how this student loan stress is going to impact the resiliency of our physicians. So fast forward 12 months, and now Dr. Walsh's physicians are on track to save $2.25 million on their student loans. And she told me just recently, wow, I don't have any more concern about my physicians because I know that they know what their options are for student loan forgiveness. Made me feel really good, and she feels really good too. So just to start out by acknowledging those things. So let's go to the program. There is a federal program for loan forgiveness called Public Service Loan Forgiveness. And I have this fact sheet available today. In fact, at the end of the program, I'll tell you how you can get a copy of it. It is a program that's been around for almost 10 years. It's a federal program, a free federal program, and it has three qualifying factors. The first is that the borrower must have a qualifying loan. So it's only federal loans that qualify. There are only special federal loans that qualify, and let's talk about that. So the qualifying loans are direct loans, so they're federal direct loans. We often see borrowers that have a different kind of loan, an FFEL loan or a Perkins loan, and this is really the first place where physicians get mixed up. They'll say to me, oh, I've got federal loans, I'm sure they all qualify. Well, they might say, oh, I've got a typical name of a student loan program, and unfortunately, if it doesn't say direct in front of the name, like the Stafford is the name I was thinking of, some Stafford loans are eligible, others are not eligible. If it doesn't say direct in front of the loan, it's not currently eligible for the Public Service Loan Forgiveness Program. However, when Congress put this plan in place, they allowed people with the older loans, the FFEL and the Perkins loans, to consolidate those loans into a federal direct consolidation loan, so that even those old loans could be eligible for the program. So that's very good news. If you have one of the older loans and you're thinking about possibly consolidating, I would ask you to be very careful. Talk to somebody about this before you do it, because there are certain types of, especially the parent grad loans, that if you consolidate them with your other loans, they'll make you ineligible for certain repayment plans. So be careful on that. So we'll talk about repayment plans in a minute, but I want to talk about qualifying employment. So for this program, employment has to be with a nonprofit or a public employer. So it's not for someone who's working in an individual practice. And sometimes, well, I should take that back. Sometimes when a physician is working with an individual practice, they actually are a nonprofit individual practice, and so they are qualified. Other times it's a for-profit practice, and so they aren't qualified. So be watching for that as you're considering your eligibility. So you might be wondering, do I qualify for public service loan forgiveness? So we have a quiz. Here's your checklist. So see if you can answer these 3 questions. I have federal loans. My current loan balance is higher than my current salary, and I plan to work for a nonprofit or a public hospital or health system. If you can answer yes to these 3 questions, most likely you will benefit from the Public Service Loan Forgiveness Program. If you can't answer yes to those 3 questions, most likely it's not going to be a big benefit for you. So that's our first screening test. All right, well, let me just back up and say, did that make sense for you? Did folks were able to answer yes to 3 of those questions? All right. So then let's go back to the repayment plans. There are lots of repayment plans available. Not all of them qualify for this program. The ones that qualify and are most helpful are the income-based repayment, IBR, and the pay-as-you-earn, PAYE. Also the standard payment and a couple of others, but the top 2 are the ones that will help you reduce your monthly payment, which really would make sense then overall for some forgiveness at the end of the 10-year program. All right, so let's look at an example. So here's Dr. Susan. I worked with Dr. Susan about 6 months ago. She had $225,000 in student loans. That number is actually low compared to the others that I've been seeing. We typically see about $250,000 to $350,000. We saw $650,000 earlier this year. That's the biggest we've ever seen. That was a big problem. But for Dr. Susan, she owed $225,000. Her monthly payment was $2,500 a month. That was a lot for her. She had been going to school for a long time. She'd been in training for a long time. She'd put off a lot of her priorities financially, and she was feeling really behind. And so that $2,500 a month was too much for her, but she was confused and didn't know what other options she might have. So she thought, well, maybe she'd do the extended plan. Well, the extended plan isn't a plan that qualifies for the forgiveness program, and plus, at her interest rate, it was about 7%. It would double the amount she'd pay over time, and so it wasn't a really good solution for her. But her plan, on the standard plan, if she would pay for 10 years, which is the standard plan, At that monthly amount, she'd pay $300,000 over the course of that 10-year period, and then she'd be done after 10 years, and she'd have complete debt relief. So when we looked at her options, it turned out that she was eligible for the pay-as-you-earn program, same loan amount, but her monthly payments when she was in residency, they were from zero, because you can have monthly payments of zero during residency at times, to $186 a month. And then once she finished training and started working, she was a family medicine doc. The highest that her payments got to over a 10-year period was $1,300 a month. Look at that for her. Isn't that a great plan? Almost in half. So she found relief on a monthly basis, and over that same 10-year period, she paid a total of $101,000 on her student loan. This is not a free ride. Borrowers on this must make 10 years of on-time monthly payments, but at a reduced amount typically. And at the end of that, she'd paid $100,000, but she still owed $296,000. That was the amount of interest and principal that had accumulated over that 10-year period. All of that will be forgiven tax-free if she continues to work at a nonprofit hospital for those 10 years. At the end of that, it'll be gone. So in both scenarios, she'd be done with her student loans in 10 years, which was what her goal was. But on the right-hand side, obviously, financially, it would let her do a lot more with her money. All right. So we've got a few minutes for questions. What questions might you have about the program, or what are you thinking? In the back. Gotcha. So the question is, how do I know if my loans really are direct loans or not? Is that correct? Because sometimes they go with a different borrower, a different lender. Yep, good. There is the perfect website. There's something called the National Student Loan Data System, and that's the Federal Student Loan Program's data system. And at the end of the talk, come up and talk to me, and I'll give you the website. And you just click in there, add your FAFSA PIN, and you'll get a list, and you'll see, or send it to me, and I'll help you figure it out. Yeah, that was a great question, these details. Other questions? So the question is, you've been getting some advertisements or some calls or emails about new consolidation programs available, and do they qualify for this program? That's a great question. There are a lot of private companies that are, lenders, and their business is to increase their pool of dollars that are lent out. And so if you're contacted directly, the federal government, unless it's your own loan with your own loan account number on it, you will not get anything from the federal government marketing to you. So it's likely a private lender, and sometimes the private lenders can be terrific. Sometimes they can be bad. There have been a number that have been indicted because of bad practices. When you have federal loans and you consolidate or refinance into a private lender, you lose a lot of the benefits. For example, you'd lose eligibility for this program. You'd also lose a number of other things we can talk about later if you'd like to. So be very careful when you hear about those things. There's a website, the federal government's website is studentaid.gov or studentloans.gov. Both of those websites go to the federal program, and that's where you can double check. That's a great question. Mm-hmm. So the question is, is it always a 10-year program, or could it be a reduced amount? Mm-hmm. Yeah, terrific. This program is always a 10-year program, but what we find is if the loan amount is smaller, the monthly payment amounts are smaller. Correct. Yeah. Yeah, absolutely. It might work for her or not. She would have to do some calculations, and that's one of the things that we offer. So let me talk about that. Any other quick questions before we go on? These are great questions. Thank you. So one of the things I want to make sure to offer before we finish is to tell you about our services that we offer. We've had the great privilege of working with physicians across the country, hundreds of folks, and we really know the peace of mind that comes when you get this all figured out. We've also worked with folks that thought they had it figured out and done a second opinion with them, and about 10% of the time people have gotten it all figured out on their own, and that's terrific. But a lot of times they haven't, and we've saved from $40,000 to $400,000 on their student loans for each of them. So that's pretty exciting for us. So we have something called a loan forgiveness consult. It's a one-to-one consult by phone and computer. And these are the 5 things that a person would receive. There'd be an analysis of their career plans to see if the program works for them. We'd actually help you figure out if your loans qualify or not, and to help with the consolidation if needed. We'd really figure out, we have a calculator that helps people figure out which income-driven plan is best for them. And we actually have some really good data that comes out of our analysis so people can make solid decisions, which we find people really appreciate. People learn about their monthly payment and that future forgiveness amount. And then there are always questions about, so how do I get onto this program or the different programs available? And so we offer step-by-step instructions and unlimited follow-up for the course of that 10-year period because there are some annual recertifications. So how would this happen? We'd be on the phone together and computer. I'd be sharing my screen. We'd be typing in your data as we go, and you'd actually see on your screen the exact numbers as we're working, and then you'd know exactly the data that you'd have to make some decisions from. And then we email that to you when we're done, so you have it. Now, we have some special pricing that we just started last month with some work we did. We typically offer these consults at $1,000 for one time forever. So it's one-time consult, but unlimited access afterwards. But because we feel so strongly about helping more people understand about this and get this done right, we're offering special pricing. Actually, we started last month and this month for the American Academy of Pediatrics. So for attending physicians, $495, and for residents or fellows, because we know that things are tight, it's $95. We can't do too many of those, but we have a number of those set aside.